What's going on, good people? This is Chris Tremont, aka the Real Binary Master, and on today's brief YouTube video, guys, I want to share with you guys some exciting information. For those of you guys that are part of the squad, that are in the chat, getting the signals, man, I'm telling you, you guys don't want this smoke, or do you? Because we deliver some fire. But anyway, enough about that. Look at this beautiful analysis on the setup. We're analyzing the market and we're looking to catch a risk to reward of anywhere from 10 pips. We're risking for a potential profit of anywhere from TP1 will be 30 pips, which is going to be right here at the 1.277 level, and TP2 for 50 pips is going to be right here at that 1.27500 level, right? Let's keep it even. Let's keep it bank numbers, and let's get into the analysis and the chart of this analysis, okay? So here we go. We have an engulfing candle here. We have an order block here to the left side. We have an order block here. We have a rejection of this order block and the price pushed down. Come back up, and we're going to retest this order block out here. Now, I had the cross down of the MACD. I'm sorry, of the MACD. But the way that the histogram was diverging from as prices going up in strength, the histogram was going down in strength. So we were diverging on the histogram. We had an order block, a confluence of order blocks within this area. And now let's get into the chart and let me show you the mess that I have made. Okay, guys. So, looking at this chart, I'm going to just go like this because here we are. This is the beautiful analysis that we were anticipating, we were looking at. So right here, we have a kind of an M structure. We have a doji candle formed here with respect to an order block that formed here. Then we broke through, came back up, created an order block here. So we have created some bearish and bullish order blocks within this region. So next time price comes up into that area, I'm going to be anticipating some type of reaction, right? So boom, price comes up, creates a order block on the 5-minute time frame, and a bearish engulfing candle rejecting the same area that we had anticipated it to reject. Now the unique thing about this order block is it gives us, on the 15-minute time frame, it gives us the order block for the first time here. So when price comes back up within this region, will be our sell limit will trigger, and then we'll be in the trade. We'll be risking 10 pips just above this wick, just above the wicks, to cover a potential profit of anywhere from 30 to 50 pips. Okay. Now, as you can see, from our entry, price dropped and smacked TP1 of 30 pips, 31 pips to be exact, but I'm sure with spread it'd be 30 pips. Okay. Now areas of TP, where you want your TP to go, are areas of confluence. Just as much as you're looking for sells for confluence, that we have order blocks within this zone. 1, 2, here, pushed up, but at the same time we're creating these order blocks that I'm looking for on the 5 and the 15-minute time frame. What else have we done? We rejected an area of interest that we were anticipating price action to push up. Not only that, we have the 15-minute order block created, as you see here, and then a continuation down, which on the 5-minute, if we zoom in and we draw a trend line, we can see that the trend line was respected numerous times until right in this area we had price break the trend line. Very unique. Another formation, another thing that had my eyes, that caught my attention. Within this area, we have creating lower and lower highs. Yes or yes? We're creating lower highs, which is bearish, okay? And now, within this zone, we've now created a lower low from our recent low. So, if I seen price push back up here, am I scared that I'm going to get taken out of trade? Not really, and here's why. We have failed to create a higher high, so I'm actually anticipating price to come back to this same level or blow through it and come smack our original TP or our second TP of 50 pips. Now, why can price react from this area? Well, price can react from this area because in the past it's acted as a support, but at the same time we've created a minor order block in the 5-minute, and right now we're getting some wick reaction off of that order block. However, the main what I'm anticipating here is that price is going to come down and fill this imbalance within this region down here where we have a liquidity zone, right? We have equal lows and we have an imbalance in price right within this region. So I've taken my final take profit just slightly above here. So right now I have secured partials at TP1, 50 to 70% of the trade in the bag with a 1 to 3 risk reward. So if we are risking 1% and we took 70% of our partials here, we're going to be up close to 2% just off of our partials. We allow the remaining trade to play out. If it comes back and hits to entry, then we get stopped out at break even. If price pushes down to our lower target, then we smash TP2 and we are going to be more in profit. But either way, we're securing profits, which is always a positive, guys. You cannot lose in this game. You cannot lose in trading if you're consistently taking profits more than you're risking to lose, right? So that was a very exciting trade to share with you guys. I know it happened, the movement, the price action happened quick. I did get it up on TradingView, guys, so make sure you guys are following me on TradingView at I think it's CGermond1. I'm going to try to change the name to The Real Binary Master, so all my social media accounts are all under the same. I hope you guys caught some value in this trade, this setup. Hope you my thinking kind of helps you understand, more. And another reason where I got this target here, right? Why do I have this random line here? Well, when we zoom in, market structure will rule with patterns and other patterns, formations. So what do we have here, right? If we cut this off and we just look from here to here, what is this? Well, if we're in a downtrend, which we are, yeah, and we look, this is a bear flag. This is a big bear flag that we're breaking down. So I expect us to continue lower, but this was a smaller bear flag where we have the pull, the pennant, the break, right? The break happened here. We had a back test, retest of the trend all the way up here, failing to create a higher high. In doing so, we rejected the trend again and started breaking down. Yes or yes? Now, within addition to this pennant formation or this pennant formation that we had to break down, that we could anticipate this to come drop, we have all this indecisiveness around the trend line. Then we have a doji followed by an engulfing candle. This was your confirmation, okay, maybe I can get in. Then price came back up to the trend, not once, but 2 times, 3 times in a row, got rejected. So if at this point, with all this rejection candles, you're not in this trade yet. We entered off of this break up the retest. We got in slightly earlier. We got in here on the 15-minute OB. Then, you're not going to get that super sniper entry, right? And the reason why I have our stop loss so tight is because, hear me out, if price comes back up and breaks this high, or this high, we're really not going to want to be in the trade, because that's telling us that the trend is changing, and price may reverse and continue on higher. But because we had numerous failed highs in a row, 1, 2, 3, 4, 5, we can anticipate not only have we had five lower highs, but in addition we've had a lower low print here and now here. So again, we're getting this wick rejection off of this order block. Price can respect it and start working its way up. I'm anticipating that we do get the continuation down to the downside, at least fill this 50% imbalance that we have over here off of this move over here off this liquidity zone. But price doesn't have to do what I think it's going to do. So with that said, guys, my cat says hello. I say good night. Appreciate each and every single one of you. Hope you guys caught some value off this quick analyzation of how I was anticipating and analyzing the market on this specific pair. Don't forget to hit the like and subscribe button, guys. Hit the bell so that way you get notified when this guy goes live to share more videos and content alike. I'll be sharing, some strategies, not only for NFX and binary trading, but also for Forex and how to find precise entries where you can risk something as little as 10 pips and go for something as much as 30 to 50 pips. Because guys, when you're risking 1 to 3, 1 to 5, you can be incorrect 60% of the time and still be profitable. You heard that correct. If you practice the correct risk to reward and you are a 50% trader, you can be highly profitable in these markets. You just have to use the correct risk to reward. You have to go for 1 to 3, 1 to 4 trades, allow your trades to play out, allow your trades to run, smack that take profit. Because we allow our trades to hit stop loss, we must allow our trades to hit take profit, so it balances out and we get the bag and continue to build. So I'll update in the comment section with a picture when we create this low down here. I'm anticipating a low to come in maybe over here somewhere, right? It's gonna blast through here, come within this imbalance, push back up, and then come down and create a low. So we'll have this low, now we'll have this low, and then I'm anticipating we get a lower low before price decides whether it's going to come back up or go back down. So with that said, short video from the Real Binary Master. Appreciate you all. See you guys on the next one.